Hi, everyone. Welcome and good to see you all back with us again. I'm Suzanne with EXP Realty.
I'm Sean Cutchens with People's Home Equity.
And I'm Jason Black with People's Home Equity Transaction Coordinator. And today we're going to give you a history of the mortgage rate, as mortgage rates have been a hot topic lately.
Oh, for sure. I think that's one of the biggest things that we've heard about is tell me more about
Absolutely.
the rates. What do you think? What do you think? What do you think? So let's go through some history and talk about what do we really think. All right. So what factors determine the mortgage rates? I'll tell you what determines the mortgage rates: the Federal Reserve, the bond market, your secured overnight finance rate, your constant maturity on treasury, and the health of the economy. But if you look to the right of that slide, for most of us, what I just said equates out to just that: a whole lot of stuff that really can be confusing. And so today we really want to just talk about what does the mortgage rate history mean for us as consumers, as loan officers, and as realtors. What do we need to know about where we stand, where we think we're going to go, and frankly, where we've been? So, Jason, I'd say let's roll into it. All right. So 1971, Freddie Mac began to track where we stood on interest rates. That was 1 year before I was born. Yes, I'm dating myself. But if you look, obviously we had a huge spike in the early 80s. Then you kind of get to see it go up and down. But overall, if you look, we've been trending downward since 1980, even though it bounces back and forth. It never bounced quite as high as it ever did in 1980. And so this slide really is an interesting picture of what we're up against and what we should expect. So I think if you take a look, Suzanne, I'm going to date myself again. But if you look between 1990 and 2000, I got my first house in 1995.
What was the rate that you paid when you got your first house?
Well, in 1995, I paid 9%. And that was, yeah.
Ouch.
But you know, that's the thing. It wasn't ouch. It wasn't ouch at all. I was 20 some years old and so excited about owning my first house. 9% didn't matter one bit to me. I was elated to get my 9% rate and buy my first house and stop renting. Do you know how much interest I was paying, Suzanne?
How much per
renting?
month? Yeah.
100% interest when I was renting. Because
Oh, of course.
I realized every dollar I spent was going into someone else's pocket.
Oh, right. Yeah.
And frankly, most of the time you find what you rent an apartment for anymore today is about what you pay for your average mortgage, especially on your first time home. And so when people ask me, did 9% bother you? Not at all. Not at all.
You were just used to it.
And it just was what it was at the moment and what I was going to pay in order to be a homeowner. And I look back on it and would do it all over again. Not a problem. 9% was what it was in the moment. And we were happy to be out of renting from someone else.
I see.
There's some give and take there, but the banker in me, Sean's got to ask, what were you making on your savings accounts? Were they actually paying then?
You know, I remember back then we were probably making like 3-4% on our savings accounts and 5 or 6 on a CD, right?
Nice.
You know, maybe a little bit less during the mid 90s, but you know, as the rates go up, so do your CDs and your savings accounts. But I can tell you the amount of money I was making on a CD and on a savings account, what even then was nothing compared to how much I was saving by not paying out into rent every month. So
Get that equity going. Yes.
that's exactly right. That's exactly right.
You know, I have a client who recently told me he's saving about $300 a month by buying a home.
Yes. And, you know, for the people that bought a home prior to this last kind of uptick in the housing prices, they got to see a really nice increase in their equity. And there's no amount of money you're going to make on a savings account or on a CD that is going to give you the return that you're going to see on 99.9% of your home purchases and the equity that accrues from it.
Well, and that's, being in the bank, it's by and large, that most people's net worth is accumulated from their house, the equity they have in their house.
Mhm.
And people come in, well, I own my home. It's paid off. What's it worth? 250,000. That your net worth's immediately 250,000. So that's where most people are really going to start to accumulate wealth. Also, is like you said, in their house as opposed to savings accounts and CDs.
That's a great point. That there's nothing to me, there's nothing more valuable than your home. All right. So if you take a look at the next slide, this is going to kind of give you the trending data. If you look, in the 70s, you're looking at, your upper sevens. Then in your 80s, you were all the way up around 18%. And then in the early 2000s, you were at 7. Like I said, mid 2000s, we went up to 9. Then we started trending back down around 08. We were in the mid 6s, then the mid 4s. Then we got to this crazy time around 2019, 2018, when we saw historically low rates. Like you see, 2020 was 2.67, ridiculously historic. And frankly, I was shocked that they stayed as low as they did for as long as they did. We all knew in the industry that they were going to start going up, and we saw it. We saw a change in philosophy around where we were with the economy and what needed to happen, and what our government wanted to see happen. And we started to see that trend up, and it trended up quick. And now we're sitting right now. The average rate's going to be around 6.5 to 7%. So it
We've
goes
tripled.
up. What's that?
We've tripled.
Yeah, it goes up and it goes down and it goes up. But we paid a little bit for seeing the rates be that low for that long. And they went up pretty quick. Like you said, they tripled. Now the good news right now is that we're seeing that the housing prices are leveling off some. And so I'll tell you, I'd much rather pay 6.5% and not have to pay $30,000 over asking price, because once I pay that $30,000, that's gone. Where if you look at the trending data, it tells you that even if you're paying 6.5, 7% right now, you're gonna have the opportunity soon to be able to turn around and refinance it, save yourself some money, maybe even cut the term. There's a lot of ways that you can do this, but paying over on the house is paying over on the house. It is what it is there. So
That's right. So go ahead and jump on board now.
that's exactly right.
Start getting some equity.
That's exactly
Refinance
right.
later.
Yeah, and as far as Suzanne, what are you seeing as far as time to buy? Is it a buyer's market? Is this a good time to be a buyer as far as housing prices go?
It's gone down as far as being a buyer's market, but instead of homes being on market for 2 days or not even being able to show the home, I'm seeing them take about a week and then they're gone. And it's just because our inventory is so low.
Well, I'll tell you, we've even seen with what we're getting contracts in for, we're seeing seller concessions come back, where
That's
the
right.
sellers are willing to help out a little bit. So I think things have evened out. I wouldn't call it, again, not a realtor, but I wouldn't call it a buyer's market and I wouldn't call it a seller's market. I think that there's room for everybody right now. So I personally feel like it's a good time.
It is a good time. I just got 5,500 in seller concessions for one of my clients, and they couldn't have gotten that earlier this summer.
Yeah. Yep.
Yeah,
And that goes a long way.
And that's a down payment.
That's right. Made them happy. Okay.
Q&A
Well,
time.
let's see. So we talked a little bit, Sean, about when you got your first home, but what's the highest rate that you can personally recall seeing ever?
Well, I didn't personally see it as I was a little young, but I saw a deed of trust, a note from the early 80s where someone was at 18%.
Wow.
And
I heard that too.
Well,
that
and
it
in
was
late
about that
70s,
high.
yeah, late 70s, early 80s, not only were they at 18%, but you almost always had to put 20% down. It's amazing how much things have changed.
That's something. Wow.
Yeah,
I
well,
thought it was high when I bought my first house, and that was only 5%.
5%, yeah.
Mhm.
It's one of
4 or
those-
5 years ago, even with some of the manufactured lot and land packages I've seen, and I'm not going to mention any specific lenders, but 9% was, par for the course. And this was 4 or 5 years ago when things were relatively low. So uh, getting into the double digits isn't unheard of, because I haven't looked at them since rates went up, but I would guarantee that we're at 6, then they're probably pushing 11.
Well, and I'll tell you, I had a opportunity to work with a client, came back, said, "Hey, you're looking at about 6.5% right now." Had mid-range credit score, mid-range debt ratio. He said, "Well, my cousin told me," and when my cousin told me, I always say it, whenever the cousin gets involved, we're in a lot of trouble. And he said, "My cousin told me I should be able to get about 4.5%. And I said, "Well, you do me a favor. You go tell your cousin to get us both the number to the place that's going to get them 4.5%, and we'll go together." And at that point, I did not get any calls back from the cousin, and we were able to move forward. But you got to know where you stand. I'll tell you a great resource, Suzanne, is, well, everyone knows Google. Everyone knows Google doesn't care about Suzanne or Jason or Sean or EXP or any other. They care about Google. So Google's going to give you a very unbiased piece of information. If you go to Google and you type in mortgage rates today and go about a third of the way down the page, there's a little grid that you can fill in. You can fill it in with how much you're looking at, what you believe your interest rate is, and how much you're going to put down. And it'll tell you within the last 48 to 72 hours, what is the average locked in rate for your state. And it gives you a very good indicator. That way you don't have any false sense of, what they should be, but you also know that this is what it means to be competitive. So it's a great tool. Mortgage rates today on Google.
Great
Well,
tip. Yeah.
Sean, maybe you could speak to this. I occasionally get the online, some of the online lenders, and they send me these advertisements, and on the surface they seem like great rates, and as I dig in, it's not as good as it appears. What's going on there?
Well, I'll say this to you. The old adage of it looks too good to be true, it's probably not true. We all, as lenders, get our money from the same place, from the Fed, and we're all going to get it at the same rate. And what it boils down to is places that are going to give you these teaser rates and these things, they're going to make their money. They're not nonprofit agencies, right? So they're going to make money, but a lot of times it's what they charge you in closing costs. It's what they charge you for the rate. The rate's going to be adjustable. So you really got to read the fine print. And to me, the biggest asset you can have when you are going to buy a house is a realtor that you trust and a lender that you trust. This is what we do every day. And so I'm going to tell you, I'm almost transparent to a fault. I'm going to give it all to you out and up front. You're going to know exactly what you're paying and why. There is nothing out there that's free, but there's ways for you to have a fair and equitable deal that gets you in the house that you need. When you look at these things and people say that they can do all these magical things, that pixie dust a lot of times is not what it's cracked up to be.
Absolutely.
So I was just wondering, did any of you have a mortgage before the year 2000?
Well, I did. Like I said, I bought my first house in like 95, paid 9% for it. And if I had to do all over again, I would do it again. I was happy to own my first home. So,
of course. How about you, Jason?
I did not. So I got my first home in 2019. So I'm one of the one of the spoiled, as I kind of see, because that and a big part of my tenure in the finance industry, I've just seen historically low rates where the government, for one reason or another, has held the rate down to try to spur economic growth, and it's been fortunate for me that's when I bought my house. But to Sean's point, if I were to, like, a lot of what I see now is people saying it's a terrible time to refinance. If I had $50,000 in debt because credit card, all the other rates went up too. So if I had 50 grand in credit card debt at 24, 25, 30% versus versus rolling that into a mortgage loan at 6.5%, I would definitely give that some consideration.
Yeah, you owe it one way or another. It's just how much you choose to pay back for it. But that's another video, right? That's
right.
So Jason, what are some areas that we can control that will help impact our mortgage rate in a positive way?
And I love that question, because I don't like the idea of just kind of being faded into something. So I love looking at things from an area of personal accountability, and for me, when I'm looking at interest rates on my end, the best thing I can do is make sure I'm maintaining the best credit score possible, making sure that when I present myself to the lender, I'm credit worthy, and that I'm gonna have the least scores on the risk profiles, and make my money work the most for me. And the other thing is, being a steward of my money, and making sure that all the assets I can bring to the table, because assets make things move. They really do. So having somebody guide me and help me plan out, what I need to reach that goal of home ownership is probably the biggest thing, because the credit and the assets are going to fall under that umbrella.
Awesome. All right.
And then, Sean, what can you tell us about buying the rate down?
Well, buying the rate down is a common practice where you can pay discount points, percentages of your loan, to be able to take the rate from what we call par, which is what the rate actually costs, to a lower rate, which ultimately will help you, get a little bit cheaper payment. Sometimes you have to buy the rate down because you're close on your debt ratio. Sometimes if you know that you plan on being in the house for a while, you may consider buying the rate down just so you've got a long-term opportunity as far as saving that money. Some people say, well, I'm going to do it and then I'll just refinance later and I'm not going to worry about buying the rate down. So there's a lot of options. And I think that's the biggest key is, do you get options? Is your lender giving you options on the rate, what you could do to pay it down, or what it would look like to refinance later?
Well, and that's the key. I think, I know for me personally, when I was refinancing my mortgage, it was looking at it's 0.25%, I think, for $400 over the life of the loan.
Yep.
And it's just having those options like that. And I'd have to be crazy not to take that. And I see that a lot when I'm looking over pricing. Is sometimes the differences aren't as staggering. Sometimes they are, but having a loan originator that'll dive into that with you and let you know what your options are, and really tell you how one side balances the other and how it all weighs out.
Yeah, and it changes every day. That's the thing. The market goes up and down, just like the rates go up and down, and it changes. And sometimes, I had a customer, we looked at the difference between buying down from they were going to be about 6.875, and the difference between that and 6.75 was like $14 on their particular mortgage. And it wasn't worth them having the additional cash out of pocket or closing costs. Some people I've seen where it's, if we do buy it down, they've got the cash and we have to be able to buy it down to get the debt ratio in line to get it to qualify. There's just a lot of options, and that's where you need a team that's going to think outside the box and help you work through all the options. So now, speaking of that, Jason, when I look at this last question, I feel like sometimes that's a loaded question, right? Because I'll ask, what's the credit score that will qualify you for the best mortgage rates, right? I know the higher, the better, plain and simple. But is there any particular area where you feel like if we can get to a certain credit score, we're in our better zone?
So there's actually a few, and and it really kind of depends on what you're going for. But I'll say, generally speaking, a 720 plus, and you're going to be well suited for about whatever. You know, and I won't deep dive into this, but if you're building your score, there's some ins and outs and some lower thresholds that, depending on what you're going for, you could get in and still do well with. But I don't want to step on Suzanne's toes too much, because I know she's got another video she put out on that subject matter. So
Yes, yes. That's a little plug for the building your credit score video.
That's right. We're going to be looking at that next. Yes, give us a like, subscribe. We're going to be putting out more videos, and we're going to be answering your questions. So if you have any questions, be sure to write them in there, and we'll get back with you. And so thank you all for watching, and we're super excited that you're here with us.
Yes, thank you very much. We appreciate your time.